All right. Good morning, everyone. Welcome again to part two of our live stream for today. So, for those of you who have not seen our other live streams, what we're doing today is trading the Phillips Pip Profit EA, and our mission is to try to trade from $1,000 to $1 million in the space of 4 years. So right now, the EA just entered into a trade. We have not got, sorry, the EA is trying to enter into a trade. We have not found an entry as yet. So it is 9:30, and this is the time when we start looking for an entry. So as you can see the chart, the price is just bouncing around, looking to take on a direction. It's starting to go down now. We've not been able to enter a trade just yet. Let's watch. We got 1 second. Okay. Let's see. All right. We got an entry to go long. That long was closed and we were entered to go short. So let's see now if the price is going to continue moving down or if the price is going to reverse to the upside. All right, so it looks like we're starting to move down. Let's see if we pick up some momentum to the downside. With this EA, all we want is to have volatility and momentum. So momentum in one direction and volatility in the market is what makes us very profitable with this EA. So you can see our first trade of the day. This was a long. We were able to catch this. And now we're in a short. So let's see how far this short trade goes and how fast it goes as well. So far it's looking good. It's looking good so far. We'll just follow. All right, we're bouncing around a bit. Coming down. Still bouncing around. Pulling back to the upside. Let's see if that's going to be a pullback for more downside. All right, looking good. Hello, hello, Pratt. I'm not sure if you're still with me. I got a bit distracted. I was doing something else. All right, so Pratt, let me know that you're here, and then I'll answer your question just to make sure that you are hearing me. Oh, you're still here. Okay, okay. Wonderful, wonderful. All right, all right. Okay, so you want to know my view on euro dollar, US dollar. Okay. All right, so the market opened and we had this big drop on euro dollar, US dollar. So if you look at the euro dollar, US dollar on the 1 hour time frame, you will see that there is a big correction, sideways move before the drop. You see that, Pratt? Let me just. Let me know if you see that, Pratt. You see that big 1 hour correction on the euro dollar, US dollar before the drop that happened today? Not getting it? Okay, yeah, good. So you see that. All right, so we're basically in a downtrend, right? So if you look at the price action, like just look left and you look at the price action, you will see correction, drop, correction, drop, correction, drop. That's how it moves, right? So we already got the drop. So what we can expect is either it continues moving down some more, just a little bit more maybe, and then it goes sideways and then drops again, right? So we're either going to go sideways for a while and then drop, and that sideways move may not necessarily be, let me see here, that sideways move may not necessarily give us another drop today. It could be another drop tomorrow. Because what you can do as well is measure the drops. If you measure the drops that you get, you can almost be able to predict what the next size drop will be. So I'm looking at the first drop, right, on this move to the downside. And we almost made that distance already, right? So we almost made that distance. So there is a possibility that the price starts to stall out around this level. Okay, so you need to prepare yourself for that. It could stall out around this level. If price pulls back a certain distance, oh crap. Okay, clicked on the wrong thing. All right, so I think the pullback already probably went to the maximum distance already on the euro dollar. So it could just start just ranging around that level, or come down just a little bit more and then go back into that range, right? So I think the move for the euro dollar may be done for the day, right? Or almost done for the day to the downside. Very, very likely. Okay, so you got to prepare yourself for that. That is a possibility. Okay, so it's very close to ending. I don't think there is much steam left in it. And if you want, you could actually use techniques like support and resistance. Let me see here. You can use techniques like support and resistance to kind of like just look to the left and look for support and resistance. There is a support area right around where the price is now. So somewhere around this level, I would expect the price to cool off, start basically ranging. Okay. Was that a satisfactory answer for you? I have another live stream coming up about maybe around 11 or 12 or so. I may jump back into my next live stream. That's where I trade manually with my liquidity map. It's called the Phillips Liquidity Map. All right, so Pratt says, yeah, thank you. So Pratt's satisfied with that. Wonderful, wonderful. Pratt, you can always use measured moves. I'm not sure what type of trader you are. If you're a trend trader, if you're one of those traders who trade in the range, if you're one of those traders who look for the impulses, which is the strong moves of the day, like this would be an impulse. What we're looking at right now, this strong move, this is what I would refer to as an impulse, right? So if you're one of those traders looking for these impulsive moves for the day, then you look for these corrective moves so that you can predict these impulsive moves, right? So that's what you need to do based on the type of trader that you are. There are other traders who are looking at price moving down to a certain support level, and then they look for a little bounce to take a quick scalp off it. So that's a different type of trader. There are other traders who are looking at the price on a higher time frame and trying to swing that from one day or 1 week into the next week or into the next month. So that's a different approach to trading. So it's always good to understand what your approach to trading is and what the analysis that you're doing is, because the analysis needs to apply to the type of trading that you're doing. I can't tell a day trader an analysis for a scalp trade, and I can't tell a swing trader an analysis for a day trade. If you get where I'm coming from? So that's where a lot of traders make mistakes, and that's how a lot of traders fail, because they're going off of the wrong information. They're going off of the wrong analysis. So Pratt, what are you trading today? And thank you very much for supporting the live stream. Please don't forget to subscribe. Hit that subscribe button and also hit that notification bell. Okay? Also give the video a like. It'll help out the YouTube algorithm. So on this stream, Pratt, it's just my EA, it's just my robot. So my robot is the one taking the trades, not me. All right, everything is completely automated. This first trade that you're looking at here, this is the first time slot that the robot traded. We were able to make a little profit on that one. See here, we were able to make 35.33 on that one. And now the robot took a sell trade down here. Would have been nice if we were able to catch it from up here, but we didn't catch it from up here. We caught it over here, and now it's building this corrective formation. You can see it. You can already see it. It's a corrective formation, right? And with it, let me just put on my Epic pen. I like having my Epic pen on so I can try to illustrate a little bit on the chart. Pratt says I'm trading gold. Okay, wonderful, wonderful. All right, Pratt, don't forget, hit that like button and hit that subscribe button. Also the notification bell. So whenever I post a live stream, you'll be updated. Okay? So I got my Epic pen here. Let me just try to bring it on. Good. So this, according to the Elliott wave theory, this is a corrective formation, and that is a corrective formation for more downside, right? That is based on the Elliott wave theory. Now, it's called a flat formation, a flat pattern. Now, the flat pattern has many different variations, right? There is the running flat, which is the one I just drew, and then there is the expanding flat, which is this one, where it comes, breaks the high, and it also broke the low, right? That's called an expanded flat formation, and that is a corrective formation for more downside. So these are forecasting tools to help you predict where the price can go and where your next entry could be and where your profit targets could also end. So what you would do is you would measure this wave, and then you would take that measurement and bring it over here to predict that the price could make that same distance from the high to the low, and your profit target may be somewhere around here just before it reaches the complete measurement, right? So that's one approach to the market using the Elliott wave theory. However, what a lot of us are never taught is that even if the price creates this flat formation like this is just one wave, right? The price could also do WXY, that's just a labeling term. It could make WXY, and then it comes down, and you think it's making this wave, but it doesn't make that wave just yet. It gives you WXY, and then it gives you something like this and calls it X, right? Based on the Elliott wave theory, that's going to be referred to as X, which is kind of like a fake out. And then it still comes back, and then it gives you, so this is WXY, this is X, and then it gives you Y. 1, 2, 3, 4, 5, or all the way back to the high, right? And that changes the entire formation whilst you're looking at taking profit somewhere down here, right? It just never gets there. And this mainly happens because of liquidity. So the market makers are inducing selling, or they're inducing buying, and so they're going to move the price back to an area of liquidity, right? So everyone who tries to sell around these levels, the stops are going to go some like in these levels here, right? Even above this level here. So if the market makers realize that there is a lot of liquidity at those levels, all they're going to do is just bring the price back. All they're going to do is just bring the price back to collect these areas of liquidity, right? And sometimes they may have so much liquidity that they bring it all the way back. So you need to keep that in mind as well. Right now, we only have about 10 minutes left on this segment of the live stream. Most likely, I'll be back around 11:30 or so, maybe 12. It all depends, but I'll be back soon. But we're just waiting to see how this price action plays out. Right now, you can see that we did have this flat type formation, and now the price is breaking the high, and so it's going into that expanded flat formation that I spoke about, right? So this is one of the reasons why I don't use this type of analysis when I'm trading. I do use it, but I use it at certain levels, right? I only use it at certain levels. So this is the flat, and that flat is supposed to bring the price down, right? Now the price came to this level. I do have a liquidity zone down here on another chart. That's my liquidity map. If I had brought that on, you would see it. I have my liquidity zone over here. So the price came down to my liquidity zone, and that's why it bounced off so aggressively, right? Now it's creating this flat formation. Now that tells us that price wants to come back to the downside. Now look at what the market makers are doing. Look at what they're doing. Look at this high. You see what they're doing? It came, broke the high. So all Elliott wave traders are looking at selling at that point. You know what the market makers generally do when you look for this wave? Instead of bringing it back to the downside like that, sometimes they will, right? But in a lot of cases, based on the amount of liquidity that is accumulated above that level and above this level and above this level, they just give you a start of the move, and then they may consolidate like this, and then they go take this one out. Consolidate, take the next one out. Consolidate, take the next one out. And then in some cases they come back like that, creating a bigger flat formation like this. And then they bring the price up to take out that level of liquidity again, right? Maybe even bring this wave deep enough to take out this level of liquidity as well, right? So you need to be very, very careful when you try to trade using different methodologies, because all of the retail trading methods out there, I'm not saying that they're all bad. Most of the retail trading methods out there are known by the market makers, and they're going to use them to manipulate price action around their liquidity levels that they're creating. So they're using these waves so that you can act a certain way, so that they can come take your money, right? So you need to be aware of what's going on. And that's why I love using my liquidity map, because I realize that it basically helps you to locate those institutional levels, and it helps you to trade within those institutional levels. So see what price did? Made you think it wants to come down. Maybe it still comes down. It all depends on the amount of liquidity that comes into the market. So if there's a lot of stops above that level, this level, this level, they're not gonna bring it down. They're gonna bring it back to the upside, right? So you need to be very, very careful with that. The price does have the possibility to go up instead of going down. And a lot of us are looking at so many different reasons to sell this instead of buy it. If the price comes down, that's going to be good for me. But am I going to try to predict it? No, I'm not. That's what this EA is all about. It's about not trying to predict where the price is going to go. It's about letting the price do what it wants to do. See what the market makers are doing? Now, this is the type of price action that costs you your account. In a lot of cases, it's going to cost a lot of traders their account. Because some traders go very hard on their trades, they don't manage their risk well, and they find themselves in a lot of trouble. So one of my aims is to just show the world the secrets of the financial markets. Make you guys aware of what's really going on in the markets. I have about 5 minutes left. Guys, remember, like and subscribe. Turn on that notification bell. This way, whenever I have another live stream, you guys will get notified. I have 3 live streams practically every day. The first 2 live streams, which is 8:30 to 9 and 9:30 to 10, that's where I'm using my auto trader. That is the Phillips Pip Profit, right? That's what it's called. And I'm using that auto trader to trade a $1,000 account to $1 million in, it should take about 3 to 4 years, right, to achieve that goal. And I am also trading my Liquidity Map method, which I do manually, and I do that from around 11:30 or so, right? I do provide mentorship for other companies, so sometimes I'm on another live stream from 10 o'clock to about 11:30 or so. So that's why I'm not around within that time frame, or I'm doing mentorship classes for students and so on. Okay, so let's try to see if I can take, I'm just going to try to see if I can find, do I have gold here? I didn't have gold in my watch list. Let me see if I can take a quick look. But Pratt, you can always come back at around 11:30 or so, and I should be back on my other stream, and we could look at gold. All right, so with gold on the 1 hour time frame, gold is still moving down. Gold is still moving down. You need to look out for when gold stalls out, because gold could slow down, stall out. Let me see here. I'm just trying to. It could be going down on the higher time frame for maybe a few days. So you could look at that as well. Look at it from the 1 hour time frame, and then you can break it down into the lower time frames to have a better idea as to what's going on. All right, so we got stopped out of our sell setup. Took a big loss on that one. Took a $40. Right now we're down about maybe $43 or so on the day. Let me just. All right, we're up, still up 11.85 on the day, but we took this little loss, which took back some of our profits. But now we're in the long side of the trade, right? So you guys remember what I told you about what the market makers will do? They will look for those levels of liquidity once they see a lot of sellers coming into the market. So you need to be aware of that, right? A lot of the information that you have about the way price moves, it's going to be manipulated by the market makers. And this is one example of that. I told you guys, Elliott wave theory, 1, 2, 3, that's a correction. This correction is called an expanded flat pattern. The market makers start making the price to the downside so that they can induce sellers on that Elliott wave pattern, right? And then they take the price in the opposite direction. Okay, see this? They've started bringing it down, and then they just take the price in the opposite direction because liquidity was here, here, and here. And there is another liquidity level higher up where they're going to push the price to, right? So because of the time limitation, my EA is not able to stay with this trade any longer. It closed it out. Okay, so we ended up, let me see here. We ended up closing off with $10.70, right? So this $23 or so drawdown that we encountered trying to catch the move to the downside, that sell trade got closed out. We were able to catch a piece of the move to the upside and recover 10.70. So for the day, we were able to walk away with 22.55. Okay? And this is why I don't use retail methods the same way that everyone else uses retail methods. I'm not saying that I don't use retail methods, because the correction, the accumulation, the range, these are also considered retail methods. Trends and so on, they're also considered retail methods. But the way in which I use them is totally different. Okay? So you guys will be able to get more information as time goes by on how I trade and why I trade the way I trade. So for now, I'm done with this section of our live stream. Thank you so much for coming. Remember, guys, hit that subscribe button, hit that notification bell, and also hit that like button. Help out the YouTube algorithm. I'll see you guys on our next live stream. Thank you so much. I should be back around 11:30 on another live stream. Bye-bye for now.